You need 4 committees across the House and Senate to get legislation done on crypto. It's not just House and Senate, it's actually 2 committees in each of the House and Senate. And so this is the first time where we've had 4 chairmen of the 4 key committees all come together and say that they're ready to support crypto legislation. There were a lot of people on X who felt like this wasn't, a mind-blowing announcement. They wanted something that they could trade on right away. That's not what this was. This was basically a statement of commitment from the chairs of the 4 committees that we're going to get legislation done this year, maybe in the next 6 months. I mean, that's really the goal. And we've never had that before.
Last week, during a press conference alongside Senate Banking Committee Chairman Tim Scott, Senate Agriculture Committee Chairman John Boozman, House Financial Services Committee Chairman French Hill, and House Agriculture Committee Chairman G.T. Thompson, President Donald Trump's AI, and crypto czar David Sachs revealed the administration is working on establishing a clear and suitable regulatory framework for the cryptocurrency industry in 2025. According to Sachs, this monumental feat, for which the cryptocurrency industry has been clamoring for years, would probably be achieved within the next 6 months or earlier. Sachs recently appeared in the latest episode of the All In podcast, where he revealed some of the reasons behind his optimism for suitable crypto regulation in the United States and what that would mean for the digital asset space as a whole. According to Sachs, not only is President Trump eager to move forward with his many campaign promises regarding the crypto and digital asset space, but this is also the first time in U.S. history that the 4 key lawmakers needed to make these plans a reality are fully in support of the crypto industry. Sachs acknowledges that this bit of news might not have translated into immediate price gains like most crypto investors wanted, but it's something that will bear a lot of good fruit for the industry in 2025 and beyond. We will bring you clips from the podcast as the besties, Sachs, Chamath Palihapitiya, David Friedberg, and Jason Calacanis, discuss this new dawn for the cryptocurrency industry in the United States. Please watch to the end, share and like this video, subscribe to the channel, and turn on post notifications for more videos like this. These actions help with the YouTube algorithm and immensely contribute to the channel's growth. Thanks, and enjoy the video.
Well, the plan was really spelled out by President Trump in his week 1 EO on crypto, and it's all spelled out in there. The principles of the administration on crypto, the president said he wants to support the responsible use and growth of digital assets and blockchains across every sector of the economy. So the principles are all there. And yesterday I was invited up to Capitol Hill to meet with the chairman of the important committees that basically govern crypto. And so we had a press conference there to announce the legislative plan. You can see there's Chairman Tim Scott, who's the chair of the Senate Banking Committee, to my left, and then to my right is French Hill, who's the chairman of the House Financial Services Committee. And then to his right is John Boozman, who's the chair of the Senate Agriculture Committee. And then to the left of Tim Scott is G.T. Thompson, who's the chair of the House Agriculture Committee. He's out of frame right now. But those are the 4 committees that govern crypto. And you may ask, why is the Agriculture Committee involved in crypto? And the reason is because the Ag Committee supervises the CFTC, the Commodities Futures Trading Commission, because commodities all came out of agriculture. So it's interesting. You need 4 committees across the House and Senate to get legislation done on crypto. It's not just House and Senate, it's actually 2 committees in each of the House and Senate. And so this is the first time where we've had 4 chairmen of the 4 key committees all come together and say that they're ready to support crypto legislation. There were a lot of people on X who felt like this wasn't, a mind-blowing announcement. They wanted something that they could trade on right away. That's not what this was. This was basically a statement of commitment from the chairs of the 4 committees that we're going to get legislation done this year, maybe in the next 6 months. I mean, that's really the goal. And we've never had that before. So that is pretty monumental.
I used to work in this because when I first launched Climate Corp back in the day, we actually were selling commodity contracts online. So we set ourselves up as an exempt commodity trading platform. And I remember all this old legislation. There was the Commodity Futures Modernization Act, if I remember, when they deregulated the energy markets. But one of the features of the Commodity Futures Modernization Act was that they created this concept of an exempt commodity contract, which was where you're not delivering a physical good. And that's basically what weather derivatives were, and energy derivatives and other kind of indices were created that didn't have a tangible physical supply, and it was still kind of shoveled in the commodities world. That's why the legacy of all this stuff kind of sitting with agriculture. Is that the way this is likely going to move forward? Is it's going to look like a new extension of exempt commodities and kind of treated like that versus being securities?
The question you're describing is called market structure. What are the definitions going to be? Because digital assets can be many things. Yeah. You can have some digital assets are cryptocurrencies. They're actually currencies. Then there's things that are crypto securities. Then there's things that are commodities. Bitcoin actually is regulated as a commodity right now. And then you've got things that aren't securities or commodities, or like collectibles, like NFTs, things like that. So there's all these different categories. And one of the things that the market needs is just clarity around the definitions so that founders know what the rules of the road are and they can actually just comply with them. So giving them those definitions and describing how a crypto project could start, for example, as a security, and eventually the protocol could become decentralized enough or maybe it becomes a commodity. That whole idea, that's called market structure. And there was a bill in the last Congress by French Hill, who is the chair of the House Financial Services Committee now, that passed the House with 71 Democratic votes. So it was fairly bipartisan. But then it went nowhere in the Senate because, frankly, the Banking Committee at that time was run by Sherrod Brown, who is anti-crypto. So it got stopped in the Senate right away. Now we have Republican control of the Senate, and Tim Scott's the new chair of the Senate Banking Committee, and he's expressed support. So I think now we could get a bill on market structure like FIT 21, again, which was French Hill's bill last Congress. I think we could do a revised and updated version this Congress. And that was one of the things the chairman expressed support for. So I think there's a pretty good chance we could get this done in the next 6 months.
What's the opposition, Sachs? I guess it feels to me like with the market structure question being addressed and answered, you would have also more protection for consumers because now businesses know the rules of the road. They follow them. There's structure that protects consumers, et cetera, et cetera. Why would people be opposed to moving this forward, moving the legislation forward, getting this all behind us?
Well, I think this is an area where there's a really good chance of having bipartisan support. We did in the last Congress, like I mentioned, that the House bill got over 70 Democratic votes. I think in the Senate, we're going to need 7 votes, seven Democrat votes to get to 60, right? Which is the number you need if you don't go through the reconciliation process. And I think there's a good chance this passes with significant Democratic support as well as Republican. It's not going to be unanimous or anything like that because there are still forces that are hostile to crypto in Washington.
Regulatory clarity is crucial for the crypto industry in the U.S. for several reasons. Companies like Ripple, Coinbase, and Binance have faced lawsuits and fines due to unclear regulations. The Securities and Exchange Commission, SEC, and Commodity Futures Trading Commission, CFTC, have given conflicting messages on whether crypto assets are securities or commodities, creating uncertainty for businesses and investors. Big financial institutions and corporations are hesitant to fully embrace crypto without clear regulations. They fear legal risks, sudden enforcement actions, or changing rules that could impact their investments. Clear guidelines would encourage greater institutional adoption and capital inflows. Without clear U.S. regulations, crypto businesses and innovation may move offshore to friendlier jurisdictions. This not only weakens U.S. leadership in blockchain technology, but also reduces tax revenues and job creation domestically. A clear regulatory framework can help prevent these avoidable losses, as well as fraud, scams, and misleading practices. Many retail investors have lost money due to hacks, rug pulls, or collapsed exchanges like FTX. Proper rules on disclosures, custody, and trading practices could improve trust and security. These and many more are the obstacles the Trump administration seeks to overcome in the coming months, which will undoubtedly contribute to significantly higher prices for cryptocurrencies. Here are more clips from the podcast.
There's one other bill that I think is going to move pretty quickly here too. So I just mentioned the market structure bill. The other area is stablecoins. And Senator Haggerty, he's on the banking committee. He just released a stablecoin bill. There's counterparts in the House. And what the 4 chairmen indicated is actually they're going to take up stablecoins first, and then market structure will follow very quickly. So I think we could see a stablecoin bill pass Congress in the next several months.
Sachs, I guess the question is the SEC was, and Gary Gensler were the blocker previously with crypto, and they just said, hey, listen, there's an existing set of rules here. Just follow those rules. Obviously, those rules don't exactly apply to the innovation happening in crypto. So the question, I think, after stablecoins, which feels like a layup and a great place to start, that'll be a great early win. And it just makes people, I guess that would just reinforce the dollar supremacy, right? If it's tied to the dollar. So that's good for America. But maybe you could talk to protecting consumers, because we all saw in the first couple of generations of crypto all kinds of grifts and ICOs and things that were never delivered. So how do you balance those two things? Protecting consumers who may get really enthusiastic about this versus, people who might try to prey upon them.
Well, the first thing you want to do if you're going to protect consumers is you want to bring the activity onshore.
Okay.
Because obviously when all the activity gets driven offshore, then it's hard for regulators to supervise it. And moreover, it's hard for the market to know who's a good actor, who's a bad actor, what's a good project, what's a bad project. So the first thing you want to do is have the innovation happen onshore in the United States. By the way, it's probably not a coincidence that the biggest fraud in the history of crypto, which was FTX, was based in the Bahamas.
Yeah.
Probably a reason.
A little bit of a tell.
Yeah. And it'll be an even stronger tell when the good projects feel like they can come back into the United States. And then you've got the shady ones in the Bahamas or in other countries. They're going to stick out like a sore thumb. Everyone's going to be able to understand that, those guys are too shady to operate in the United States.
Mm-hmm.
So the number one thing we need to do is bring the innovation onshore. In terms of the framework, I think the market structure bill is going to define, here's a security, here's a commodity, here's what you have to do. Here are the disclosure requirements around creating a crypto project. So all of that will be in the bill. And then in the meantime, the SEC has created a new task force under Hester Peirce, who's a SEC commissioner. And she is already starting to do work in that regard to define a better regime at the SEC for crypto projects. You mentioned that Gensler said that the SEC's doors were open to crypto companies and they should come in and talk to us and work with us. That was very disingenuous. Crypto companies would tell me they would go see the SEC. The SEC would tell them nothing about what the rules were, but they would have enforcement people in those meetings just writing down everything they would say. And the next day they would get sent a Wells notice. So the truth is the SEC was not cooperating. They were not providing any clarity. They were just honeypotting founders basically to come in, and then they would immediately investigate them. I mean, it was really terrible. Look, we expect founders to play by the rules and abide by the law and be compliant. But when you won't tell them what the rules are and then you prosecute them, there's no fair way for them to comply. So the most important thing is to give them a framework. I think the SEC now is doing that. They're starting to do that already. And then legislatively, we're going to have a bill that does that, moving through Congress over the next few months.
Anything on the AI front that we can look forward to in the coming weeks that you're working on? I know that's the other part of your mission.
Well, the big thing is, like I talked about last time, the president rescinded the Biden EO, which was this 100-page monstrosity. It burned some regulation on our AI companies. I think that decision's been proven even more right in the wake of DeepSeek, because we know that China has basically caught up, or they're very, very close to catching up. It felt like that Biden EO was written in a vacuum in which the U.S. was the only player in AI. And that if we imposed a bunch of burdensome rules on our companies, that somehow that wouldn't allow China to catch up, right? And I think it's pretty clear that China is very, very competitive. If we hobble our AI companies, it's going to run down to China's benefit. So I think that was a very good decision. And what the president said in his EO is that we should devise a new AI action plan to replace that Biden EO, and we're working on that right now.
It's no news that President Trump's support of the cryptocurrency industry is giving digital assets like Bitcoin much-needed legitimacy in the United States. As of February 10, 2025, no less than 20 U.S. states, including Kentucky, Arizona, Utah, Illinois, Texas, Ohio, Pennsylvania, Missouri, Montana, and Alabama, have introduced or are considering legislation to establish Bitcoin or cryptocurrency reserves as part of their state assets. Kentucky recently proposed legislation for a Bitcoin reserve, allowing up to 10% of excess state reserves to be allocated to digital assets. Arizona's Senate's Finance Committee has approved the Strategic Reserve Bitcoin Act, permitting the state to invest up to 10% of public funds in Bitcoin. Texas has introduced Senate Bill 778, proposing the creation of a Bitcoin reserve separate from the state's general revenue fund, enabling the state to hold and acquire Bitcoin as an asset. Pennsylvania has also proposed the Pennsylvania Bitcoin Strategic Reserve Act, enabling the state to invest up to 10% of its general fund, investment fund, and rainy day fund in Bitcoin. Florida is the latest state to make similar moves. According to recent reports, Florida State Senator Joe Gruters has introduced a new bill, SB 550, that would empower the state's chief financial officer to invest public funds in Bitcoin. Designed to incorporate cryptocurrency into Florida's broader financial strategy as a hedge against inflation, the legislation proposes that state funds can be safeguarded from economic volatility by including Bitcoin and other digital assets as stores of value. The bill outlines several methods for holding Bitcoin, directly through a secure custody solution via a qualified custodian or as an SEC-approved exchange-traded product. In addition, SB 550 permits the CFO to loan out Bitcoin holdings under specific conditions to generate additional returns, provided these loans do not increase the state's financial risk. To ensure fiscal discipline, the bill caps the allocation of public funds to Bitcoin at no more than 10% of any account's total funds. Moreover, if enacted, the legislation would enable Florida to accept taxes and fees in Bitcoin. These payments would be converted into US dollars and deposited into the General Revenue Fund, which supports the state's ongoing expenses. SB 550 also amends various sections of Florida law, including investment rules for public and pension funds, aligning them with the new policy framework. Supporters of the bill argue that integrating Bitcoin into the state's investment portfolio could significantly bolster Florida's financial reserves, making them more resilient in the face of economic uncertainty. Do you agree with their assessment? Please drop your replies and comments on the besties discussion in the comments section below. If you find this update insightful, don't forget to like the video, subscribe to the channel, and turn on notifications for more in-depth discussions on cryptocurrencies, digital assets, and the evolving financial landscape. Thanks for watching.